Hey guys, I think it might be too late to be making this video, but today we're going to make a video about whether or not you should buy or sell Nvidia. If you want to save time, I would suggest in the short term that you probably should take some of your profits and sell some Nvidia or rotate into other stocks. But if you want to do a deep dive with me, then please stay tuned. Alright, so what is this chart? This chart is basically comparing Nvidia, which is the blue line, to Tesla, which is the orange line, and the SPY S&P 500, which is the light blue line down here. What this is, I don't know where to start, but basically, Nvidia is looking like a bigger bubble than Tesla at the moment. And we're not talking about the late Tesla. We're talking about the pandemic era Tesla, when it was freaking going up like 5 to 10% on a daily. Look at this. If this doesn't look like a bubble, then I don't know what I don't know what it is. It's just insane how much this stock has overextended. I believe it should pull back to around right here. And in all honesty, its PE is at around freaking 90 right now, which is absolutely insane when compared to the other Magnificent Seven stocks, which is trading at around like below 30. That's for sure. So and I think a lot of investors reasonably justify this latest with their latest earnings release, which is all the way back in Q3 24. It paints a very bullish picture, but I think we're overextended now. So, as you know, Nvidia used to sell computer GPUs and graphics chips, and now they're pivoting into more of a database AR type model, and they've done really well. There's no competition as of yet. As of now, there's no like real competition, but I do think in the future that more competitions could start popping up in the likes of AMD, Intel, and then there's other stuff like ARM, which is taking the mobile AI, the mobile cell phone based AI will be in ARM and stuff, and Samsung and everyone wants part of this AI pie, and Nvidia isn't going to stay on top forever. That's the thesis, and the stock pricing, whatever we have priced in right now, is way too optimistic. I mean, could it reach 1,200? I think it can, but not in 2024. Yeah, well, not under fair valuation basis would it reach 1,200 in 2024. Maybe it'll reach that high in 2026, 2028 maybe, but not in 2024. So what I see happening is yeah, wow. Woo. It's gonna pop up as it did right now. It's probably gonna pull back to around this level. Let me just give you a better view. Yeah, it's at 680 right now. So it's go right now. It's popped up to 680. I think it'll most likely retreat back to 480. And if the bears really want to push it, it might go down to 400. Yeah. It might go down to around I will say the 550 area. And if it ever reaches that level, I would think that's a really good buying opportunity. But right now, let's dive into some fundamental analysis, as they say. All right, so right here, let's go back a little bit more actually. Right here, incredible, just freaking incredible. Look at our revenue growth from 2023, fiscal year 2023, which I would assume is actually 2022. So from 2022 to 20, in the span of 2 years, this business has 3x'd its revenue. And at the same time, if I'm correct, I believe they increased their gross margins. Yeah. So this new AI database. I'm not gonna pretend like I know that much about AI and databases because I'm an accountant by nature, so I don't really know that much about the tech side. But I do know how to read these statements. So this AI stuff is very profitable for Nvidia. It's actually more profitable than its original GPU business, and it shows right here in the gross margins. Yeah, there you go. Year over year, it has plus 20 basis points in the gross margins. Quarter over quarter is plus 3. So these chips are either, I'm guessing they're selling for a higher price, and Nvidia, for each unit that they sell, they take roughly 75% profit margins. So I'm thinking these chips are a lot more profitable than the GPUs that we're making for the consumer market. These are for businesses most likely. So yeah. And another slide I want to show you guys is this free cash flow. And right here is saying that they're going to use around 3.9 billion in buybacks. That's just going to drive the stock price insane, unless they're buying the dips. If they're buying the dips, then you kind of have like a safety net of sorts to cushion the downside, I would assume. Yeah. Going through this is just recapping, and then there's this tech fluff to hype up the investors even more. Although some of it is interesting, but I'm not gonna pretend like I know that much about it. See, why is this in the slide? I really don't get it. Okay. Alright, the next slide is slide 31 that I just want to show you guys. Alright, so this is, it looks simple, but it's actually very important. They're saying that the more of these chips they sell, the more momentum and of a competitive advantage, or as Warren Buffett says, more of a moat they build. So it's like a ever accelerating moat right here. It's a scale, install base, developers to end users create cloud and OEMs that generate scale brings in more money, and it speeds up the developers, blah blah blah. This is like a loop, upward spiral of sorts for Nvidia products. Could it be bullshit made up by Jensen? Could be, but I think this is very likely to happen. Okay, and then here's more hype propaganda for the investors. Well, that's, at least that's how I look at it. If you're someone like a CEO at Microsoft or something, you could use this to sell it to your boss or something like that. I don't know. Slide 44. All right, right here, this is actually really interesting. So back in 2018, I believe, if you adjust these FY numbers, they're on a weird calendar schedule, but you have to -1 to get to the actual year. So 2018, right here, they're selling mostly this, GPUs and the 3060s and whatnot. Here we're having a little bit of AI and cars mixed in, and right here is where they're projected to be. And even with this, their forward PE ratio, which one of these is that? Where the heck is their forward PE ratio? EPS, blah blah blah. PE forward PE ratio was 32, which is still a little bit on a more expensive end, but right now it's at 95. And there's a slight risk that we might miss the future earnings. So like I said, if you want to wait for a little bit of a pullback, you could definitely buy in at a cheaper price. Or you want to hold this long term, you could end up doing really well. But right now it's definitely overpriced at 95. All right, back to this. So their expected revenue to freaking pop up almost double. Well, it's already popped up almost double from 2022 to 2023, which is kind of expected. But where are they going to be in, actual 2024, which is the year that we're in right now? I think they're most likely going to go even further, to be honest. Yeah, shit. Maybe you should just buy it now. I don't know. What the fuck do I know, right? All right, so looking at this mix right here, it used to be in F1 2020, 45% gaming and 41% data center, and we moved towards today. It's only 19% gaming and 75% data center. Data center business is actually quite a lot more profitable, or has higher gross margins than the gaming sector. It's actually really good news. As I'm reading this, I think I'm actually buy some on a dip. All right, slide 55. But you know, buy low, sell high. I can't be FOMOing into this. All right, annual cash and cash metrics. Just how much cash they have on hand here. I think overall it's very healthy. Maybe they can make more side investments into companies like ARM and whatnot. I think they've done really well with ARM actually. Has their investments almost doubled since, maybe tripled. Definitely doubled since they last bought them. If they bought them pre-IPO or IPO. If they bought them at IPO, they've definitely doubled by now. Internal work hype. Reconciliation. Slide 50. Alright, so this is where the really good stuff is. Alright, this is the gap. Sorry, not the gap. Net income, really strong. Gross margin. You see this right here? Gross margin. Gap gross margin over this time frame. As we move forward, Nvidia is getting more efficient, and their gross margin keeps going higher. I don't know if this is by charging higher prices, or they're cutting expenses, or maybe just the data center business is more profitable overall. But their gross margin is getting higher. That's actually really freaking interesting, because even a single percentage shift in gross margin would mean a lot more profits for the investors. Alright, it's just looking backwards now. Oh yeah, this is really good. This is a really good business to invest in if you're in for the long term. Assuming it's a really good business to invest in for the long term, assuming that competitors are slow to catch up to Nvidia and they maintain this trajectory. I think there might be competition coming in from AMD and Intel that might drive the prices down for the H100 or H200 chips. That might hurt the gross profit margin. So if that happens, I think the stock might dip a little bit or dip a lot. Yeah, I think just overall right now is super expensive to buy at 90 PE. But maybe start a small position. Yeah. So overall thesis, long term, Nvidia is really good. If you already got some, keep holding. If you want to get in, I will wait for like a pullback. Like today, it's down 5%. Maybe I'll wait for around lower end under 650. If really lucky, under 600. I'll wait for that area before you buy some. But overall, I see this as a really strong stock. Yeah. I'm a firm believer that AI is probably gonna take all our freaking jobs in the future. But yeah, buy some Nvidia to hedge against your future starvation or something, I guess. So to recap, if you have some, hold it. If you want to buy some, wait for a little dip, start a small position and start adding to it. And if you already I don't think you should sell anytime soon. It's not a short-term stock. You should probably hold it for 3 years would be the sweet spot. Maybe 3 to 10 years if you really want to reap the end rewards of this. But I don't think there's much of a pop factor left in this stock because it's already priced, might be overpriced right by now. And that's all I have for you guys. Please like and comment, subscribe, whatever, if you like my content.